Markets are crazy. The stock market can feel like a roller coaster ride with its unpredictable ups and downs. One moment you're on top of the world and the next, you're plummeting into uncertainty. It's a wild ride that can leave even the most seasoned investors feeling dizzy and disoriented. Up one day, down the next. The volatility can be nerve-wracking, making it hard to know when to buy, sell, or hold. It's like trying to predict the weather in a stormy season. Impossible to get it right every time. It's enough to make your head spin. The constant fluctuations can lead to sleepless nights and endless worry. You might find yourself glued to your screen watching every tick, every change, hoping for a sign that things will stabilize. Experts tell you to stay the course, ride it out. They advise patience and long-term thinking, reminding you that the market has historically trended upwards over time. But in the heat of the moment, when your investments are taking a hit, it's hard to keep that perspective. Easy for them to say, right? Their money's already in the game. They have the experience and the resources to weather the storm. For them, a market dip is just a blip on the radar, a temporary setback in a long journey. But what about you? What about the everyday investor with skin in the game? You might not have the same safety net or the same level of confidence. Every dip feels personal, every loss a blow to your financial security. Your hard-earned cash is on the line. You've worked tirelessly to save and invest, and seeing your portfolio shrink can be heartbreaking. It's not just numbers on a screen, it's your future, your dreams, your plans. It's tough to stomach those losses, those dips that feel like dives. The fear of losing everything can be overwhelming, making it tempting to pull out and cut your losses. But is that the right move? We've all been there, staring at our portfolios, wondering if stay the course is just code for kiss your money goodbye. The uncertainty can be paralyzing, leaving you stuck in a cycle of doubt and fear. We crave certainty in a world of unknowns. We want to know that our investments are safe, that our financial future is secure. But the truth is, the market doesn't offer guarantees. It's a gamble, a risk that we all take in the hopes of a better tomorrow. We want guarantees, a crystal ball to show us the future. We want to know when to buy, when to sell, and when to hold. But that crystal ball doesn't exist. No one can predict the market with absolute certainty. But guess what? That crystal ball, it's shattered. The future is uncertain, and the market will always have its ups and downs. The key is to stay informed, stay patient, and stay the course. Let's get real about market uncertainty, using real-life examples. History has shown us that the market can recover from even the most severe downturns. It's a cycle of highs and lows, and understanding this can help you navigate the turbulence. And trust me, I've got a few stories to tell. Stories of resilience, of investors who weathered the storm and came out stronger. Stories that remind us that while the market may be unpredictable, our ability to adapt and persevere is what truly defines our success. Ever ridden the DC Metro? It's quite an experience, isn't it? The hustle and bustle, the constant movement, the anticipation of reaching your destination. Think about it. You're packed in like sardines, shoulder to shoulder with strangers, all of you sharing the same goal, getting to where you need to be. You glance up, staring at that flickering arrival sign, hoping for some good news. The minutes tick by, and you start to feel the weight of time. 10 minutes? Then 12? Then suddenly delay. The frustration builds, and you can see it on the faces around you. Everyone's patience is wearing thin. Sound familiar? That's market uncertainty in a nutshell. Just like waiting for that delayed train, we often find ourselves in a state of limbo, unsure of what comes next. We crave predictability, just like we want that train to arrive on time. It's a basic human need to know what's coming, to have a sense of control over our journey. We check the apps, the news, anything to get a handle on when that train's coming. We refresh our screens, hoping for an update, a sign that things are back on track. Just like we obsess over market forecasts, expert opinions, searching for that one indicator to tell us, buy now or sell everything. We want that certainty, that assurance that we're making the right move. But here's the kicker. Even with all the fancy algorithms and data crunching, those arrival times are often wrong. The train shows up late or not at all, throwing our plans into disarray. Just like those market predictions we cling to. Despite all the analysis, the expert advice, the endless data, the market remains unpredictable. It's a reminder that sometimes we just have to ride it out and adapt to the changes as they come. Remember when the DC Metro invested millions in a new prediction system? Cutting-edge tech, supposed to give us real-time accuracy. And what happened? Glitches, delays. The system crashed more often than my computer after a Mad Money episode. Point is, even with the best intentions and technology, predicting the future is a fool's errand. Markets are complex systems, driven by emotions, global events, and a million other factors. Trying to predict their every move is like trying to herd cats. You might get a few to cooperate, but most of them will just scatter in every direction. Even the smartest people get it wrong. Take Sir Isaac Newton, the guy who practically invented physics. Brilliant mind, right? Well, he also predicted the world would end in 2060, based on his calculations, of course. Now, I'm not saying the market is going to implode in 2060, but it does prove a point. Even geniuses with fancy formulas can't predict the future. Markets are full of surprises. Black swan events, unexpected crashes, sudden booms. They come out of nowhere like a rogue wave on a calm sea. Every day we're bombarded with predictions. Market gurus on TV, analysts with fancy charts, and financial advisors with their confident forecasts. They all seem to have a knack for making us believe they know exactly where the market is headed. They use complex jargon and impressive visuals to back up their claims, making it hard to resist their allure. Even that neighbor who claims to have made a killing on Bitcoin, you know the one, always boasting about their latest investment triumphs at every neighborhood barbecue. They make it sound so easy, as if all you need to do is follow their lead and you'll be rolling in money. They all claim to have the inside scoop, the secret sauce to market success. They speak with such confidence and authority that it's easy to get swept up in their enthusiasm. But have you ever stopped to wonder how many of these so-called experts actually get it right consistently? The truth is, predicting the market is incredibly difficult. The financial world is influenced by countless variables, many of which are unpredictable. Economic indicators, political events, technological advancements, and even natural disasters can all play a role in market movements. So when someone claims to have the secret sauce to market success, it's worth taking their predictions with a grain of salt. But let's be honest, how many of them actually get it right consistently? Remember Jeremy Siegel? He wrote the book Stocks for the Long Run, which is considered a classic in the world of investing. Wrote the book Stocks for the Long Run. Great book, by the way. It's filled with valuable insights and long-term investment strategies that have helped many investors navigate the complexities of the market. Great book, by the way, but even he admitted that he couldn't have predicted the dot-com bubble or the 2008 crash. These were monumental events that caught even the most seasoned experts off guard. But even he admitted that he couldn't have predicted the dot-com bubble or the 2008 crash. These events serve as a stark reminder that the market is inherently unpredictable. No matter how much data we analyze or how many trends we study, there will always be elements of uncertainty. The truth is, no one has a crystal ball. The future of the market is shrouded in mystery, and anyone who claims to have all the answers is either lying or delusional. Anyone who says they can predict the market's every move is either lying or delusional, or both. It's important to approach market predictions with a healthy dose of skepticism and to remember that even the experts can get it wrong, is either lying or delusional, or both. So the next time you hear a market guru making bold predictions, take a step back and consider the bigger picture. Investing is about making informed decisions, managing risk, and understanding that uncertainty is part of the game. So why do we keep searching for that magic formula? Why do we hang on to every word of those market gurus? It's simple. We crave certainty. We want to believe that someone, somewhere, has figured it all out. It gives us a sense of control in a world that often feels chaotic and unpredictable. We want to believe that if we just follow the right advice, make the right trades, we can beat the market and retire early. But that's a dangerous game to play. The market doesn't care about our emotions. It doesn't care about our need for certainty. It just is. So, what's the answer? How do we navigate this market madness? It's not about trying to predict the future. It's about accepting that we can't. It's about building a portfolio that can weather the storms, no matter what gets thrown our way. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes, stocks, bonds, real estate, maybe even a little gold. Think of it like this. You wouldn't bet your entire life savings on a single hand of poker, would you? The same principle applies to investing. Ignore the day-to-day fluctuations. Tune out the noise. The market is a marathon, not a sprint. Focus on the long game. Invest in companies you believe in, companies with solid fundamentals and a bright future. And remember, time in the market is better than timing the market. The longer you stay invested, the more time your money has to grow. The market will always be unpredictable. There will be ups and downs, twists and turns, but that's part of the ride. Embrace the uncertainty. Build a diversified portfolio, and most importantly, stay invested for the long haul. Because in the end, the only certainty in the market is that it will keep moving. So buckle up, hang on tight, and enjoy the ride.